House Finance Committee, and we will begin with a few items where we have had a request by the patrons to strike certain legislation. So the three measures that have been, we've had a request from the patron to strike them are House Bill 1488, that's Delegate Albo, collection of delinquent local taxes in a period of delinquency. House Bill 1966, this is Delegate Massey. This is on the Education Improvement Scholarships Tax Credit, matters related to eligibility and benefits for certain students. And House Bill 2393, Delegate Klein. This is for tax credit for the purchase of gun safes. The chair will entertain a motion. The motion is to strike. Is there a second? Second. Discussion on the motion. Hearing none, those in favor of the motion will signify by saying aye. Aye. Those opposed? It is so ordered. All right, we have several items that are on the docket for full committee consideration. So let me begin. House Bill 1518, I believe I have seen Delegate Knight. Morning.
Good morning. Mr. Chairman, House Bill 1518 was brought to me by it was brought to me by some CPAs. And what happens today, this has to do with auto parts. Today, if you go to, say, a Napa Auto Parts fella, he carries, and they order auto parts from him, the dealer does, and they'll bring like brake pads and brake rotors and brake parts, and they carry them to the dealer tax-free. But the shop supplies, which are like the WD-40 and some of the rags that they will use, they're supposed to charge tax there to the dealer. Then, when the dealer puts all these parts on your car, you go to pick up your car, you get charged sales tax on the brake parts, but you also get charged in 90% of the cases in the state of Virginia for these shop supplies. So the consumer in Virginia is getting charged this tax twice through the end user. What this bill does is it brings consistency to almost everything that the parts supplier would carry to the dealer would not be charged tax, and then all of these parts and consumables would then be charged tax to the dealer, from the dealer to the consumer, which would be a single taxation. I've talked to the tax department. They said this would be more consistent, would be a shift in policy where they're not inadvertently they're getting the tax collected twice. They told me, Mr. Haskins has told me, that if this bill does pass this year, they will have to get with the auto parts sellers and dealers and make sure that they have this consistency in there. So I've had some auto parts dealers, my CPA said, that are not charging the tax. The tax is being collected on the other end, but the tax department has sent them, one guy in particular, a bill for over $100,000 to pay for this tax where it's being collected on the backside. So this is just going to try to add some consistency and make it easier and let the citizen of Virginia only pay the tax once.
All right, I believe we've had some discussion of this measure earlier. Any questions from the committee?
Move to report.
Second.
There is a motion and a second to report House Bill 1518. Any discussion on the motion? If not, members will indicate their vote on the electronic voting board. Have all members voted? The clerk will close the roll. House Bill 1518 reports on a vote of 15-0.
Thank you, Mr. Chairman, members of the committee.
Thank you, Delegate Knight. All right, I believe Delegate Peace is here.
Good morning, Mr. Chairman, members of the committee.
Morning, Delegate Peace. Welcome, and I believe you have House Bill 1950.
House Bill 1950, as introduced, no amendments. House Bill 1950 is designed to address a hardship that's created some cash flow issue for certain wholesalers. Y'all are very familiar with the cigarette tax process, but localities that impose local cigarette tax and do not currently allow for refunds for return stamps or impose penalties or fees for such return stamps are providing this hardship. And so the bill would clarify that any locality imposing a local cigarette tax must refund the purchase price of any stamp purchased to evidence payment of the tax without penalties or additional fees after verifying the stamps have been returned to the locality. The stamps have been paid for. The bottom line is that the tax is due and not payable is entitled to be refunded. It's due at the point of sale, and the sale has not occurred. So this bill is to rectify that situation. There are about 105 localities that impose cigarette taxes, and only a handful are not doing this. So this would remedy that situation.
Okay. Questions from the subcommittee, from the committee? All right, since we are hearing this here, Delegate Peace, do you have someone else?
Yeah, there's some folks that may like to speak to the bill. No opposition. I don't think there's any fiscal impact to the state.
All right, if there's somebody that you have to speak on your behalf, anything that, the additional points that need to be made. Okay, I'm seeing none. All right, if there's someone representing the localities here that would be willing to offer their view, would you say there's no controversy?
I can say that no one's come to me with any objection to the bill. So.
Move to report.
Motion to report in a second. I don't see anyone from VACO or VML coming to dispute that view. All right, there's a motion and a second to report. Discussion from the committee. Hearing none, members will indicate their vote on the electronic voting board. All members voted that would like to vote. Close the roll. Bill 1950 reports unanimously. The vote is 14-0. Thank you, Delegate Peace. I understand Delegate Kilgore is in a meeting, but will be with us just after a bit. So that being the case, let us go to subcommittee reports. And I'm going to turn to Delegate Byron, Subcommittee 3.
Thank you, Mr. Chairman. The first bill that we have is House Bill 2058, Delegate Watts' bill.
All right.
This bill would clarify that the storage of inventory within the Commonwealth gives rise to nexus sufficient to require an out-of-state seller to register as a dealer for the collection of sales and use tax on sales to customers within Virginia. Under current law, it's not clear whether the presence of inventory in Virginia is sufficient to require a dealer to register. So this is a bill that talks about collection of sales tax in cases similar to Amazon that we already have done in the past. It has a substantial revenue impact, which is already accounted for in our budget, and the subcommittee recommended reporting 4-0.
All right. We heard the recommendation, and this is a pretty substantial plus for the budget if this were to be adopted. Is that correct?
That is correct.
All right. We heard this in subcommittee. Delegate Klein. Delegate Watts is here. It is her legislation, so perhaps she would be best situated to respond to that. Did you hear the question? Bill?
Yes, I did. Thank you, Mr. Chairman. I think first let me start with the difference is partly a difference in the marketplace where this has been brought to us by, in fact, one of the members of the Governor's Economic Advisory Group who works in the area saying that this is what other states are doing, why aren't we doing it? It is a real loophole in the business in which I engage that Virginia is not closing this, treating sales that, for example, Amazon may have, if you pay an extra premium, you'll get those diapers at your door the next day. And it's that kind of inventory that is being picked up as it has been stored in Virginia. It's for sale to someone who's purchasing it in Virginia. And because of the fact that Amazon not only has its own inventory but is working with other suppliers, this is the loophole that is being closed with this particular bill, again in line with what other states are doing. So it's partly a change in business that's bringing it to us at this point. But I can't speak to every other Nexus bill that has ever been there. This one is a clean relationship.
And I will say, Delegate Klein, I'll turn to you if you have further questions. I will say this did come up in the Governor's Advisory Council on Revenue Estimates. One of the retailers indicated this and indicated that in other states similarly situated this measure what has been adopted. Delegate Klein.
Well, I understand that the state likes the idea of more revenue. That's never changed. But this bill has been before us before in various iterations, and there have been questions raised about whether and how Nexus was reached, and whether simply having the internet stations with the headquarters in the state was sufficient Nexus, whether the purchaser, whether the items, all these different points in determining Nexus. And we can never, even though we have determined this or considered this for many years, we never up until this point determined that there was a Nexus. So I know this is a change. I appreciate the gentlelady's information about the state's position, but I'm looking for a little more clarity than that. So I may just pass this time.
Let me suggest that the tax department is here and perhaps they.
Well, again, it's not. No, that's not going to help. Mr. Chairman, having the state talk about how important the revenue is on this bill is not going to help answer my question.
Mr. Chairman,
I suspect this was not going to talk about the revenue. This will be a talk about what constitutes Nexus.
Mr. Chairman, we can talk with revenue or not, but what this is, Mark Haskett, Department of Taxation. What this bill is trying to do is really, this is tax that's already owed. If you go online and purchase an item and the vendor, whether they're in Virginia or outside of Virginia, doesn't collect sales tax from you on that purchase, you as the consumer owe the use tax to the Commonwealth today. There's a line on the income tax return that's probably not very heavily used for you to report that information and report that tax. So this is not going after tax that's not already owed. What this is doing is helping collect something and making it more efficient way of collecting, rather than collecting something from 4 million residents who are making purchases online. We would ask the out-of-state vendors who are storing their inventory in warehouses in Virginia to collect the tax. As the chairman said, this is something that virtually every other state has made this ruling. If you look at the case law on this, the prevailing federal case is Quill, And the Supreme Court in Quill 1992 said in order for a state to be able to assert nexus or require an out-of-state vendor to collect tax, that out-of-state vendor must have a physical presence in the state. And currently, Virginia law defines physical presence in the terms of either real property or warehouse or in the terms of employees. What this bill would do would broaden the definition of what is a physical presence to include tangible property, which is clearly physical. So that's all the bill is doing, Mr. Chairman, is trying to help level the playing field. Already, if you purchase things from a company like Amazon, they collect Virginia tax. Y'all passed legislation a few years ago that mandates that you, or if you are an affiliate of a company that has a warehouse in Virginia, then you have to collect the tax. But what happens is companies like Amazon do more than sell their own product. They sell product for other people, and they provide fulfillment services. You can be a small dealer in California or anywhere else in the country, and you can sign up, and Amazon will take your supply, your inventory, put it in their warehouse, advertise it on their website, sell it for you. They'll package it, deliver it, just like it's their product. But however, since it's not a Amazon product, they don't collect tax on it today. What this would do is say, if you're one of these companies using those services and your product is stored in a warehouse in Virginia, which we believe is pretty clearly physical presence under the Quill standard, then you would be required to register to collect the tax.
Okay, Klein.
As tax is there a time minimum for presence in the warehouse?
Mr. Chairman, the bill does not have a de minimis requirement in it. We're not aware that any other state or the courts have mandated a minimum amount of nexus.
Dr. Klein.
Is there a size frame on the business, or is this going to apply not only to Amazon but also to a mom and pop that has decided to try and expand by taking orders over the internet?
Mr. Chairman, if the mom and pop company, regardless of size, uses a warehouse in Virginia to store their product in order to sell it to Virginia customers, then this would say that company would have to collect Virginia tax, just like the mom and pop store that's sitting on Main Street has to collect Virginia tax.
Delegate Loxam is next.
Thank you, Mr. Chairman. I do see this as a business fairness. I'm speaking in favor of the bill. I have to collect sales tax on everything that I sell that isn't for that is for end use, and I would like to think that anyone that sells and ships into my area would also have to pay the same sales tax. That I would be on an equal footing with them. Thank you, Mr. Chairman.
Delegate Watts.
Thank you, Mr. Chairman. Actually, I had turned off my button because the last comment really one before it really is also extremely important on the even paying field for brick and mortar retailers in Virginia.
Chairman Byron, the motion from the subcommittee was to report.
Mr. Chair?
Yes, there's someone, Joseph, if you can use that light the speak button, that helps me, that I know you're there. Delegate Marshall.
Oh, the white, oh, okay. Oh, I see the interviewer has disappeared.
He can return.
Oh, he popped up again, okay. Mr. Chairman, with the speed with which items, personal items, property items can be shipped around the country with FedEx or UPS, why wouldn't some businesses decide, well, you know what, we're not gonna park these things in Virginia anymore, so we would lose the revenue that comes from the trucks or whatever means of shipping those to Virginia. Why wouldn't some smart entrepreneur said, well, kiss Virginia goodbye, I'm gonna park it in Tennessee?
Mr. Chairman, I mean, clearly business can make decisions where they want to store the inventory. Our understanding is if a business participates with the fulfillment by Amazon, the business itself does not have control over where the inventory is stored. It's staged at a warehouse closest to where the customers are, and Amazon or similar type company, they make the decision where the inventory will be, and provide reports back to the business. There are some other models out there where there are unique warehouses that provide services for just one type of product. I'm aware there's one in Virginia Beach that it's the only warehouse in the country that stores product for companies all around. But probably there could be in another state. But from our understanding, virtually every other state has already determined that having inventory sitting in a warehouse in your state is enough to require collection of sales tax.
Further discussion? If not, the motion on House Bill 2058 is to report. Members will indicate their vote on the electronic voting machine. All members voted. Clerk will close the roll. House Bill 2058 reports on a vote of 15 to 3. Clerk Byron.
Thank you, Mr. Chairman. The next bill is House Bill 2460, Delegate Bloxham's bill. This bill limits the amount of historic rehabilitation tax credits that may be claimed by each taxpayer to $5 million per year, including any amounts carried over from prior taxable years. Its effect begins on or after January 1, 2017. In understanding a little bit better, by limiting the tax credit, they still get to take that over a 10-year period at the limit of $5 million. They also, it was brought up in the subcommittee that they also receive a 20% federal tax credit as well, and that this virtually, at the moment, only affects 4 taxpayers in the Commonwealth. So it's an effect that it's a rather large one. So instead of taking, up to $50 million a year, this limits them to the $5 million each year over a longer period of time. And the committee recommended reporting 5-0.
That's your recommendation.
Yes.
I would note it was 4 or fewer, as I recall the conversation, taxpayers. And while there had been some substantial conversation about this credit, there is a study going on. This was put forward by the governor separately from the legislative branch. So that is why the bill has found its way to us. Is there discussion on the motion to report? Members are prepared to report, prepared to vote. Members will cast their vote. Clerk will close the roll. House Bill 2460 reports on a vote of 18 to nothing. Does your complete your report on subcommittee 3 delegate?
That's correct. Thank you, Mr. Chairman.
Let us turn then to subcommittee 2, Delegate Klein.
Subcommittee 2, we can start with House Bill 1665, Delegate Robinson's bill, extends the sunset date of the motion picture production tax credit 3 years, 2019 to 2022. Subcommittee recommendation was to report 10-1, and I so move.
Motion is to report House Bill 1665. You all had a hearing in subcommittee on that, Delegate Klein, thank you. All right, to discussion on that motion. Hearing none, members will indicate their vote on the electronic voting board. Clerk will close the roll. House Bill 1665 reports unanimously 17 to nothing. There is 1 abstention.
I'll ask you later about which movie. Next one was House Bill 1838, Delegate Orock changing the process of allocating the credits by ensuring that half of those credits go to underserved areas, and recommendation was to report amendments. There were 5 amendments. I will move the amendments.
There's a motion. Motion and a second to adopt these amendments. Are the amendments primarily technical, is it?
They clarify that unused funds can be reassigned, and there's an enactment clause establishing a date for regulations, so primarily technical.
Discussion on the amendments. Those in favor of the amendments will signify by saying aye.
Aye.
Those opposed? All right, the amendments are adopted.
And then, as I said, Mr. Chairman, the recommendation of the subcommittee was to report with, as amended, 11 to nothing, and I so move.
Motion is to report House Bill 1838 as amended. Discussion. Members will indicate their vote on the electronic voting board. The clerk will close the roll. House Bill 1838 passes unanimously.
Mr. Chairman, next bill, House Bill 1961, Delegate Hugo's bill, codifying a Supreme Court ruling dealing with the methodology for conducting certain gross receipts. Fairly technical bill, current court case law codified. The recommendation of the subcommittee was to report 10 to nothing, and I so move.
Motion is to report House Bill 1961. Any conversation from the committee? Members will indicate their vote on the electronic voting machine. Clerk will close the roll. House Bill 1961 reports on a vote of 18 to nothing. Delegate Klein.
Thank you, Mr. Chairman. The next bill, House Bill 1962, Delegate Massey's bill, increasing the educational improvement scholarship tax credit from 65% to 90% of the value. Donation made to the foundation. There were no amendments. The subcommittee recommended reporting Bill 7 to 4, and I so move.
The motion is to report House Bill 1962, the vote 7 to 4. And is there any discussion from the committee on this measure? This would increase, as I understand it, the value of that tax credit from the current 65% to 90% for the taxpayers that claim it. Right. Is there discussion on the motion to report House Bill 1962? Hearing none, members will indicate their vote on the electronic voting machine. All members voted. Clerk will close the roll. House Bill 1962 reports on a vote of 10 to 8. Right.
Thank you, Mr. Chairman. The next bill, House Bill 1963, there's been a request to have that go by today, so I can move to this.
Motion on 1963 is to take that bill by for the day. Any discussion? Those in favor of the motion to carry it by for the day will indicate by saying aye. Aye. Those opposed? All right, so ordered. Thank you, Delegate Klein.
And the next bill, House Bill 2074. Have that bill go by today, is that correct? All right, and I would move to go by today.
The motion on House Bill 2074, Delegate Rush, for that bill to go by for the day. Discussion? In favor of the motion signify by saying aye.
Aye.
Those opposed? All right, House Bill 2074 goes by for the day. And I should note probably at this point, we do have several items of legislation in, I believe it's Delegate Hugo's subcommittee, Subcommittee 1, that will be heard Wednesday following the floor session. And then following that, the full committee will convene. So there will be one more meeting of the full committee. These measures there will be time available to hear anything of that. All right.
Thank you, Mr. Chairman. The next bill, House Bill 2113, Delegate Keem's bill, requiring employers to notify the Department of Tax after discovery of security breach of payroll information. There is a substitute that requires notification of the Attorney General, which then notifies the Department of Tax, and I would move the substitute.
There is a motion to adopt the substitute. Discussion on that motion. Hearing none, those in favor of adopting the substitute will indicate by saying aye.
Aye.
Those opposed? All right, the substitute is before us.
All right, now the substitute before us, I believe Delegate Keem.
Sure. Thank you, Mr. Chairman. Mr. Chairman. The line amendment that you have in front of you is offered to the substitute, and I'll just explain to you very briefly what the intent of the line amendment does, but just to make sure you
And Delegate Keem, is your microphone on, or you?
Yeah, the green light's
You can
on.
speak right into that so
All
we
right.
can.
I certainly can speak louder. So, Mr. Chairman, I have an amendment to the substitute that we just adopted, and the original intent of the bill is to provide an opportunity for the tax department to get in front, to get ahead of any potential fraud that might occur if a company gets either hacked or there's phishing or something that breaches the employer's database as it relates to tax refunds, tax information, Social Security, etc., which then leads an unscrupulous player, criminal, to create a refund for state and tax purposes, and then they'll file it under the wrong name. So then they receive tax refunds before the actual innocent person would be able to file. So what the substitute does is it conforms the language with existing data breach law in Virginia as opposed to creating a new section. So that's what the substitute does. As we're drafting this, we heard from a couple of stakeholders who said there may be situations.
Delegate Keem, could you suspend for just a minute? Yes, Delegate.
Can you hear?
Mr. Chairman, you have a point of order?
Yes, sir, we can't hear him at all.
The mic's, I don't know, the mic's on. But
Use somebody else.
yeah, maybe I'll.
Does this work better?
Oh my God.
All right. I'll scoot over here. Sorry about that.
Chairman, I would ask Delegate Keem to state the amendment.
Sure. So the amendment would not apply this section to those companies, employers who may have information about payroll that's not their own employees' payroll. In other words, for example, if you're a bank.
Mr. Chairman, point of order. Delegate Orak.
But, Mr. Chairman, with all due respect, we don't have the amendment.
You
It
don't?
has not been reported.
Oh, I'm sorry. I thought I offered the amendment.
No.
It needs to be read because we don't have it in front of us.
Thank you.
Let us, tell you what, Delegate Keem, with your indulgence, we will suspend on this measure presently to make sure.
Sure, no problem.
Other members can get copies of that amendment.
It's a text.
Delegate,
It's in the packet.
committee will suspend. Delegate Keem, I'm gonna ask our staff to read the amendment out. I believe it is in your packet, if you will. Okay, the substitute is there, and the
Mr.
staff will
Chairman,
read the amendment to the substitute.
the line amendment is to the substitute, and it would be after, on line 136, on page 6, after fraud, to insert, with respect to employers, this subsection applies only to information regarding the employer's employees and does not apply to information regarding the employer's customers or other non-employees.
Mr. Chairman, I really apologize. I just assumed that everybody had the amendment. Okay, so the line amendment that was just read by clerk amends the substitute that's in the package, but apparently the line amendment's not in the package. I'm sorry about that. This would basically carve out a category of employers who may have information within their business, payroll, et cetera, which does not pertain to their own employees, and that's what the line amendment is.
Delegate Klein.
This amendment is a limiting amendment.
That's
I
right.
do not see a problem with it. I think it's fine.
Delegate Head.
Thank you, Mr. Chairman. Just to clarify, so this would take out a payroll company who might very well have the exact same information that the employer has, so that if there was a breach of security on that, you might still expose, mightn't you still expose the taxpayer to the same information? Because I know in my company, what I transmit to my payroll company, if that were breached, could be pretty damaging to the employees. I'm concerned with that.
Clarify, Mark asked Department of Taxation. This is only limited to, it doesn't affect the payroll companies. This limiting language is to employers who have information related to non-employees. The part about the payroll providers is still in the bill, and they would still be required to report. What someone brought to us, the matter that a company can be an employer, but it would also have information that has tax information about some of their customers, and they didn't want their customer information to have to be reported to us in the event of a breach. It came from the banking community, but it's not intended to undo the payroll provider part. It just limits it if you are an employer and you have third-party data that includes withholding information, it would not apply to those individuals.
That's responsive to the question. Further discussion on this amendment?
Chairman.
Delegate Byron.
I'm just curious, the first one showed a revenue gain. Where's the revenue gain from?
Mr. Chair, the substitute fiscal impact should be the same as the fiscal impact of the original bill. It should be online somewhere.
He's reporting that it's unchanged.
Yes, the fiscal impact should not have changed. It's just.
Delegate Byron.
Chairman, so for the patron, I guess then, if this is about a breach of payroll data, why does it have a positive $800,000 gain? Where's the gain?
Sure.
Correlated?
Mr. Chair,
Tax may be prepared to answer this, or you may.
Sure, Mr. Chair, I'd be happy to answer, or if tax wants to answer as well. The issue is that there have been already, over the last few years, proven instances where Virginia employers have had their information hacked or breached, which then resulted in real criminal activity where I think about 800,000 or so, maybe more, dollars of state tax refunds were issued to the wrong person, somebody who's alleging that he or she is a taxpayer. So by the time tax found out about it, it was too late to go and undo that. And so by stopping that crime from happening in the first place, that would be taxes that the state of Virginia will not be issuing to fraudulent tax refunds. And so as a result, we would be generating revenues. Or the tax can explain that better, but that's the concept.
Delegate Byron, does that meet your?
Well, kind of indirectly, yes, I guess. So you're going after the criminals, is what you're saying, by capturing the breach.
Mr. Chairman, Delegate Byron, what prompted this was, there were at least several instances last year where we found out by reading the newspaper that, for example, Tidewater Community College was one that was in the newspaper. Someone sent an email to their HR department and said, do we have your payroll records? And they sent the payroll records to the person. Well, the person was a crook. And by the time their employees filed their state tax returns, the crooks had already filed state tax returns for them, and we weren't able to recover all that revenue. So this would require us, for companies that have a breach, to notify us so we can put a stop on their employees' refunds to prevent that type of fraud. And we estimate about $800,000 we'll be able to save from going out in fraudulent refunds.
Okay, thank you.
Mr. Chair. Delegate Marshall.
The tax department explained that you could stop a refund to an employee. I mean, how does that help the employee who should get a refund?
Mr. Chairman, what we would do is, in that event, if we find out that there's been a breach and we have a list of the employees, we would temporarily stop their refunds until we can verify that it's the actual employee asking for it and not somebody who's not entitled to the refund.
Delegate Marshall.
You're issuing checks, either paper or electronically, and they are issued on the bank that Virginia uses, or the finance department uses. And isn't there a way that you can identify the recipient of this? I mean, if it's one of these fraudulent where somebody, you know, is not paying attention and that's all these records.
Mr. Chairman, a lot of these frauds are committed by individuals who live out of state, and it gets beyond the reach of the tax department at that point. 2014, somebody beat me to filing my tax return. Somebody in Florida got a really nice refund. I didn't. To the extent we can recover it, we do, but sometimes these are out-of-state banks, even out of the country by the time the individual gets the money in. We don't have the long arm of the law or assistance from law enforcement to recover these.
Mr. Marshall.
Any red flags go up when, the Bank of Pango is the recipient?
Mr. Chairman, we have a lot of red flags that go up in our system on various things that we try to stop refund fraud. This would just give us one more tool that we could use to issue another red flag that possibly that this person's refund is not legitimate. We have lots of ways we check, but this is just one more tool we could use.
Didn't realize that the tax department was so well heeled to people be going after your tax return. I believe the motion of the subcommittee was to report the substitute for which there has been amendment. Am I correct on that? All right, there is a House Bill 2113 in the form of a substitute as amended. There's a motion to report. Discussion on that motion? If not, members will indicate their vote on the electronic voting board. The clerk will close the roll. House Bill 2113 reports on a vote of 21 to 13. I'm going to ask Delegate Klein if you would suspend for just a moment. I see Delegate Kilgore is here. Chairman Kilgore, if you have a measure coming directly before the full committee. This is House Bill 2198.
It's House Bill 2198. I think I provided some information that would make it more like, would make it exactly like the Senate bill that would, Mr. Chairman, and basically what that would do is put the, instead of going all the way back to July, it would just start it in January of 2017, and that would be a net, I think that would be a positive impact for this year's budget, where you wouldn't be going backward. And then I think we would need to, there's one area down there where it says after July 1, 2017, that should be January 2017 in the first part of the bill under
Line 33.
before. I think let's see. I'm trying to match these up right now. It would be line 44 if it's exactly like the Senate bill, but I don't have what you're going off of. You may be right. It's in subsection B, the last paragraph is subsection B, in the last sentence of subsection B. Yes.
All right, there is some amended language. Staff, do you have a proper citation on that?
Mr. Chairman,
Be sharp up there.
Be sharp.
move the substitute.
All right, there is a motion to adopt the substitute. Is there a second? All right, those in favor of adopting a substitute which reflects that other body which shall not be named.
Yeah, reminds me of Delegate Griffith when he was here. Don't do that. But anyway, basically this now would
Let me
be
just formally adopt. Those in favor of the motion to adopt the substitute for 2198 will signify by saying aye. Aye. Those opposed? All right, substitute is before us. Thank you.
And now basically this is the same bill that you've had before, the coal tax credit, except that it does save money in this budget year. Moves it sets the cap that we agreed to last year at the 7.3 on the electricity incentive, which is the first part of the bill. And then on the second part of the bill is the for the coal operators. It sets that up. So that's basically the same bill you've had, except that it does save money in this budget year, and hopefully we can work through this with the governor's office with some other.
There is a motion to report the substitute. It's duly seconded. Is there discussion on the motion? Hearing none, members indicate their vote on the electronic voting board.
Better turn it on.
All right. The clerk will close the roll. House Bill 2198 in the form of a substitute reports on a vote of 11 to 5 with 1 abstention.
Thank you, Mr. Chairman.
Thank you, Delegate Kilgore. All right, Chairman Klein, we're back to you for.
Mr. Chairman, the last bill subcommittee recommended reporting was 2246. That was Delegate Jones' bill to have another amnesty program. As Chairman is aware, we've had 2 amnesty programs in the last 2 decades. Both occurred during times of either flat or declining revenue. This one would be for not less than 60, no more than 75 days. If any taxpayer required it but has failed to file a return or paying the tax administered by the department. And recommendation of the subcommittee was to report 7 to 1.
Motion is to report House Bill 2246. Mr. Chair, Delegate Marshall.
What is the time frame in which this amnesty is to be done? And is there an announcement in the tax returns that are sent out, attention taxpayers, between, July 1 and, August 15th, you can get this amnesty? I mean, how do taxpayers learn about this? They're not clairvoyant.
I think Delegate Klein gave part of the answer to that, but tax probably has a fuller enunciation.
Mr. Chairman, Kristen Collins with the Department of Taxation. The bill just specifies that the amnesty program must occur during fiscal year 2018 between a period of 60 to 75 days. In the past, the department has actually reached out to taxpayers that could qualify for amnesty directly with letters to the taxpayers notifying them. And we typically have a pretty good advertising campaign. We post on our website and other, advertising medium to let people know that this amnesty program is out there.
Mr. Chair, Delegate Marshall.
As attractive as the literary components are to the finance website that you all have, I've never read it, so how do I know that this is going on?
Mr. Chairman, to respond to Delegate Marshall, most of the taxpayers that would qualify for the program will receive a letter, to their homes directly. So even if you're not, going on perusing our website, you should be made aware of the program through direct mail.
Mr. Chairman.
Delegate Marshall.
But this notification that you would undertake is only where you would think, know, or suspect that someone owes back taxes. If in fact I owe back taxes and you don't know it, you're not notifying me.
Correct, Mr. Chairman. So yeah, we do. We generally do TV and radio broadcasts as well. If somebody's out there and doesn't know about it and we don't know about them, if they're watching TV or listening to the radio or on our website, we try to advertise in as many different manners as possible.
May I ask one more question?
Delegate Marshall.
Is there any way that you could put this in the returns that you send out now? Say, look, between such and such a dates, the law in Virginia is such that you may pay back taxes without penalty. That at least would get people's attention who are saying, oh, I now can do this, where you would pick up people that you may not know, and you also would very inexpensively notify people who do know that they have back taxes. but you're alerting them, you know, all the items in free, so.
Sure, Mr. Chairman, Delegate Marshall, we can put, you know, as soon as the bill is passed, by the General Assembly, we can notify taxpayers directly through the forms as well.
Okay.
Thank you.
In the meantime, we've added to one of your favorites for your online website.
Well, really, I'm now gonna read that much closer than before.
All right, the motion on House Bill 2246 is to report. Further discussion on that motion? All right, members will indicate their vote on the electronic voting board. Clerk will close the roll. House Bill 2246 reports on a vote of 17 to 1. Fine. Okay, thank you for the work of your subcommittee as well. Delegate Hugo, I did see with us. Delegate Hugo.
Mr. Chairman, Subcommittee 1 did meet a number of issues. I think we've got one more meeting on Wednesday. Thank you for that. First up is House Bill 1890. It's collection of sales and use tax. It removes the exceptions persons selling certain products such as window shades, kitchen equipment, and countertops for retailers. The minimus loss to the state, localities. It was discussed in the subcommittee. There were no amendments. It was reported unanimously 7-0.
Recommendation on House Bill 1890 is to report. Any discussion from the full committee? Hearing none, members will indicate their vote on the electronic voting board. The clerk will close the roll. House Bill 1890 reports on a vote of 18 to nothing.
Mr. Chairman, we'll just skip this a little out of order. We're going to Delegate Rush.
Objection. We didn't get a.
It didn't work.
All right. You could, if you would prefer, we can destroy the roll, or you can simply note it on a. All right, Delegate Hugo.
Mr. Chairman, House Bill 2193, going to go a little out of order. Delegate Rush, it requires the localities permitted taxpayers to provide an aggregate estimate of the total cost of all personal property used in a business that has an original cost of less than $700 in lieu of a specific itemized list. This should be a good item for small businesses. It was debated at full committee extensively. On the state, there was no revenue impact, none on the locality. It will help small business. There were no amendments. It was the recommendation of the subcommittee to report 10-0, and I so moved.
Second. There is a motion to report House Bill 2193. Discussion on the motion. Hearing none, members will indicate their vote on this best bill of the year, nominated by Delegate Klein. Clerk will close the roll. House Bill 2193 reports unanimously 18 to nothing. All right, Delegate Hugo.
Mr. Chairman, next up to bat is House Bills 2104 from Delegate Byron, pertaining to machinery and tools tax. It pertains to evaluation and appeal of certain local taxes. It permits the Commissioner of the Revenue to utilize any method that may reasonably be expected to determine the actual fair market value of machinery and tools. It was discussed extensively at subcommittee. There was no impact to the state. On the localities tended to be unknown. There were no amendments. It was the recommendation of the subcommittee to report 5-2, and I so moved.
Motion is 5-2 on reporting on 2104. Delegate Byron.
If I could just make a comment, because there are some of the members have come to me, and there's been a little bit, I think, of a misunderstanding, or I would like to think that there's a misunderstanding of what this bill actually does. If I could just take a moment of the committee's time to clear up a couple of things. The only time that this would apply is if there was a bona fide third-party appraisal. Right now, 10 years ago, we codified that a local tax commissioner should consider bona fide third-party appraisal because there was a problem with assessing the fair market value of a manufacturer's machinery and tools as required by the Constitution. That third-party appraisal in itself can cost $300,000 and up just to get the bona fide third-party appraisal from someone. And then if what has happened in some very limited cases, I would say, but seriously expensive cases, is that the local commissioners of revenues have ignored the third-party appraisals, and there's no clear appeals process, so they have to go to court, and that can cost an additional $300,000 to $500,000. So that's what this bill is meant to address. That is allowed for and stated in our Constitution, and that it is not affecting that many people, but it's a process that should be clarified, and I would hope that they would support this bill.
All right, I'm going to do Delegate Klein.
Chairman, just a question for the patron. I'm just getting up to speed here, and I'm trying to determine whether as you say, the examples that you've been given of third party say ignored or considered but not reflected in the new evaluation. I'm just making sure that the commissioners are concerned that this is going to result in across a local jurisdiction essentially havoc with revenue.
And this is permissive. Sandy Rowe is here, who could probably explain it very quickly better than I can. Would someone be able to address that question?
Delegate Byron and I, we certainly will. I think I've heard enough conversation that I'd like to allow just a couple of minutes to each side, maybe 3 minutes or so. I understand there are some who have concerns. I know there are some who, I've heard from both manufacturers, among others, that this is a good idea, and I've heard from others that they have reservations. So let's open it. Let me
I
hear from,
appreciate that, thank you.
hear from the advocates first, and we'll allow, let's say about 3 minutes, unless we need to go further.
Mr. Chairman, Brett Vassy, President and CEO of the Virginia Manufacturers Association. The delegates' introduction is accurate. In '07, you allowed for these independent appraisals. Also in '03, the Supreme Court and the Board of Supervisors of Fairfax County versus Telecommunications Industries upheld this issue of dealing with assessments based on fair market value. This bill doesn't change the methodology. It does not change the rates. All it does is provide some fairness in the system. What we're hoping to do is to create clarity where local government, the local commissioner, must state in fact and law if we go to the expense of preparing an appraisal as to why they have either ignored it or we have a disagreement. And if we still can't come to a resolution, we're creating an appeals process to the state tax commissioner. That is all this bill does. We're asking for some fairness. From an economic development point of view, and we have 3 or 4 manufacturers across the state here who are dealing with these issues. Virginia is becoming a state with a reputation of being hostile toward manufacturers that are technology intensive. We've got to have fairness in the system. We think we've worked out a pretty good bill here, but we also have committed to Henrico County to continue to work on some refinements to the bill dealing with de novo hearings so that there's clarity as we move forward if you hopefully pass this bill out of this committee. So we are continuing to work with our friends in local government, Mr. Chairman.
Brett, do you have one particular person who could give us a representative instance of the circumstance that you're describing?
Yes, Mr. Chairman. I have Mr. David Crawford with AMPAC in Petersburg, who has a perfect example of the type of scenario we're trying to correct.
Okay, if you could give us just a short summary of what it is that we're addressing in this legislation.
Yes, sir. I currently work for AMPAC Fine Chemicals located in Petersburg, Virginia. The facility was purchased in August of last year by a company out of California. And we are preparing to go to the city now because of our tax situation it takes quite a long time in the pharmaceutical industry to get a facility up and running, and quite a bit of money. And if you look at the value of the facility, of the assets that were purchased throughout the years, some parts of the facility are over 40 years old, and we do have in hand a third-party appraisal assessment of the facility, and our tax liability would be significantly reduced if we were able to use that fair market value from that third-party appraisal versus the other values.
Thank you, and thank you for being with us today.
Yes, sir.
All right, let me hear if there's someone on the other side that has concerns about this legislation. Yes, sir. Again, we're in a fairly short compass, but if you can give us a summary of the
Yes, sir.
problems as you see.
Thank you, Mr. Chairman. I'm Scott Harris, the Commissioner of Revenue for Hanover County. I think there are three things about this bill that I think are problematic and negative for localities. It's costly, it's inconsistent with sections 1 and 2 of Article 10 of the Constitution, and it's inserting redundancy that's not needed. The cost, the original bill showed a cost impact to the Commonwealth. And if you were to assume that appeals were going to increase to the tax department, I think it's safe to assume that they're also going to increase to localities. If you make I think a fairly modest assumption, this could easily cost millions of dollars in new employee cost for the localities in defending these new appeals. Mr. Chairman, it is Section 1 of the Constitution, Article 10, says that tax values will be approximate fair market value. Section 2 says they'll be done uniformly. I think the bill, as it's proposed, takes the Section 2 and removes it to a point where uniformity would be impacted. With these independent appraisals, it's quite possible to have multiple values for the same piece of property throughout the Commonwealth in various different localities. I wanted to talk just quickly about the third-party appraisals as well. I deal and I see third-party appraisals quite frequently, and the code already requires that we consider them. The code doesn't, I don't see where the code allows us to ignore them. It requires us to consider them, and when I see them, one of the things that I'm doing is trying to determine, is it helping me to achieve fair market value in a uniform manner? And the idea that all third-party appraisals are actually approximate fair market value, I think, is a stretch. The redundancy, Mr. Chairman, the code already requires us to consider obsolescence. It already requires us to consider various valuation methods. If you look at 58.1-3503, you see that requirement. 58.1-3507 also requires that. So, Mr. Chairman, there are safeguards in place right now. If there are, as stated, a few problems, it seems like we sure are piling on a lot of localities in the Commonwealth just to solve a few problems. Thank you, sir.
I'll ask you one question. One of the advocates indicated to me that he thought there were perhaps a half a dozen Commonwealth-wide on an annual basis. Could you care to respond to that?
A half a dozen of problem appeals?
Yes.
I think that's probably very accurate. In Hanover County, I deal with dozens of appeals every year. Currently, I would assume that the amount would increase pretty significantly. The Commissioners Association encourages its members to work well with the manufacturers, so I think that there probably are legitimately some problems, but I don't know that this broad brush for 135 localities is the right answer.
Thank you, Mr. Harris. Yes, sir. Very briefly.
Good morning, Mr. Chairman. I'm Charlie Croson, representing VML, VACO, and the City of Newport News. Manufacturers have said that manufacturing operations are not coming to Virginia because of the taxes. It's not the taxes, it's the workforce. And BEDP reports 116 manufacturers located in Virginia last year. And Chesterfield County the last few years has one in particular that's a $2 billion investment, 2,000 jobs. The City of Newport News has had 20 manufacturers located in the city of Newport News in the last few years. So, and tax does not have the expertise in order to rule on valuations, and it would cost the tax department more money to hire somebody, and I have yet to find a budget amendment that would cover that.
Thank you. All right. Discussion, Delegate Farrell.
Mr. Chairman, if I may, in the subcommittee, there was some of these I think do need to be worked on. I'm glad to hear they're going to keep working with Enrico. One of the phrases in particular that bothered me that would make me feel a little better was on line 29, all forms of depreciation. Simple in words, yet allows for a lot of fun, I think. Fun for accountants, maybe not fun for the commissioners. So especially with bonus depreciations you can take out for the IRS, which really don't reflect market. I talked about this in subcommittee. I don't think anybody's be surprised. I did I actually moved to work this bill back up, knowing that I could take this part out. I hope if people agree with me. But so I have a proposed amendment at the appropriate time, Mr. Chairman. I'll wait if you want to have more discussion, or I'll present it now if you want.
Let's go ahead and take it.
It would be small. It would be on line 29, beginning with all. You just strike all forms of depreciation, including. And that's it.
And the word obsolescence would.
That would remain. Would remain. I didn't get my hair to get on fire on that one.
So on line 29, we'd strike all forms of depreciation, comma, including.
Yes, sir.
All right, would you describe again what the effect of this?
Well, I think that whole section on line 28 through 31 is very specific in the formula that the commissioners have to deal with. If you want to get into philosophies of if line 23 is sufficient to just say use fair market value, that's a different story. But all forms of depreciation, it would essentially get rid of dictating to the commissioner that you have to assume all forms of depreciation in your assessment of fair market value, when often, I would argue, they're not even really tied together unless you're doing an asset purchase deal and you can get a step up in depreciation, then it becomes very attractive. So I just thought it got a little, it just made me feel squirrely, quite frankly. So, and I thought it caused more problems than trying to solve, so that's why I wanted to take it out.
All right, let's see if there's a second on the motion to strike those 5 words and the comma.
Second.
Motion and a second from the patron to make that amendment. Discussion on the amendment. Hearing none, those in favor of the amendment signify by saying aye.
Aye.
Those opposed? It is so ordered.
Thank you, Mr. Chairman.
All right, Delegate Klein. All right, Delegate Klein.
I appreciate the work of the subcommittee on this. I think, and the amendment I think is improvement. Support the bill. I would disagree with the gentleman who said that businesses are not coming here because of our taxes. I think they are, considering our tax rates, considering the fact that we have a machinery and tools and vehicle poll tax at the local level, and considering whether or not to locate in Virginia. It is detrimental to our growth. It hurts our rankings, and we need to deal with it. We need to deal with it in a comprehensive fashion. So there needs to be comprehensive tax reform. I'm a little concerned at the piecemeal whittling away or impacts that these different bills are having on the different taxes in Virginia. But I do think it moves us in a positive direction. I also would note that there's an existing appeals process currently, and the tax commissioner on valuation it's a little bit broader, it's a little bit more aggressive, but it still provides businesses with some ability to be heard. So I don't think it's treading a whole lot of new ground. It's just kind of improving the current process. So I'm going to support the bill.
Delegate Byron, then.
And I appreciate that. The only thing I was gonna add, because some people aren't aware of it, that, tax already has, appeals that they get on behalf of BPOL, so it's not setting a new precedent, so it is another option for them. And we've taken up enough time, I appreciate that.
Delegate Farrell.
I want to be brief and just reiterate, I appreciate you saying you're willing to work with Enrico. I think that's very good, and I look forward to monitoring how those talks progress.
There is a motion to report, I'm hearing somebody.
I think I have to withdraw my original motion to report and make a new report as amended.
Motion is withdrawn, and the seconder also withdraws. All right, Delegate Hugo.
Mr. Chairman, with that, I make a motion to report House Bill 2104 as amended.
Motion to report House Bill 2104 as amended. Discussion on that motion. Hearing none, members will indicate their vote on the electronic voting board. All members voted. Clerk will close the roll. House Bill 2104 as amended reports on a vote of 12-4. Delegate Hugo.
Mr. Chairman, next up, House Bill 2105, again, Delegate Byron. This is pertains to investment of public funds, the investment authorized public officers, municipal corporations, and other political subdivisions to invest any or all of the monies belonging to them or within their control, other than sinking funds, in the Virginia Investment Pool Trust Fund. Mr. Chairman, first off, there was an amendment in the nature of a substitute, and I would move the adoption of the amendment.
Motion to adopt the substitute on 2105. Is there discussion on that? Can you tell me just briefly, either the chairman or the patron, how that alters the original bill?
I defer to Delegate Byron.
All right, Delegate Byron, do you have a?
Yes, Mr. Chairman, the substitute was presented, in a response to, a request, I guess, or a discussion with the state treasurer that, the bill was specifically naming something in the bill. So, there were some changes made to the bill to clarify that, and it does not change the intent or what the bill does. It's basically just a streamlining the process. It's not a mandate on localities. This comes from local government, the bill. And this is to allow them to pool their funds, which gives them more choice. But all the other funds that they invest, they can do that, and I hope somebody will correct me if I'm wrong here. They're already able to do that now with the Virginia Investment Pool, because it was formed under the joint exercise of powers. They have to go to local government to get an ordinance and do a lot of other hoops so this will streamline the process like their other ones and allow them the option to invest in this fund without doing that.
This is on the substitute.
On the substitute,
okay.
Correct.
Is this question, Delegate Head, on the substitute?
Yes, Mr. Chairman.
All right, Delegate Head.
Mr. Chairman, I have received some contact from my treasurers even after looking at the substitute. And I'm just wondering, because the concern that they have expressed, and I've actually had from 2 different counties that have contacted me on this, to have concerns that even though you're no longer naming the managing authority of and the private company that's managing it, you're still singling out an individual fund. And I went through and read the whole chapter last night and looked over everything. I can't find anywhere in code where we have ever done that. I may have missed it because it's a fairly long chapter, but I did try to be thorough in the looking at it. And I just wonder if we're getting into some shaky ground and going in that direction. I do fully understand the intent of this, and I don't mean harm to the legislation in any way. I just want to make sure that we're not getting into some murky water here.
Byron?
Well, as much as I'm sure the state treasurer would rather have local government invest in their funds rather than the choice of local government pooling at a rate that might be more attractive to them, I think some of that is grasping at something that I don't particularly agree with. Staff did not agree with it. I have someone here, speaking on behalf of local government, so it's interesting that your local government is, saying something different. I don't know, it's up to the chairman if he would like to hear from the representative from local government.
We are going to hear from, again, this is one where there's been some subsequent discussion, and Delegate Byron, you seem to be bringing these interesting measures that gather.
Local government's a little bit confused this year, I guess.
Gather interest. Delegate Farrell,
Chairman, I'll wait for the discussion.
okay, so if that's, Delegate Byron, if that's suitable with you, I'm going to hear, and again, I'm going to allow about 3 minutes or so for each side. Let me first hear from the advocates on 20 Mile 5 and
Yes, I prefer the other way, that way, we already know what the bill does.
What's that?
We already know what the bill does, so I hear from those that are opposed to it.
Okay, well, then we can start with those who are opposed. Let me back up, and we'll start with those who either have concerns or are opposed. I see the treasurer, I don't know if you wanted to, whoever it is, yes. Yes, sir.
Good morning, Mr. Chairman. I'm Scott Miller, Treasurer for Hanover County. I also have with me Pam Johnson, the Goochland County Treasurer. Ourselves and about 35 treasurers have expressed concerns about specifically identifying one trust pool in state code. It implies a favoritism there perhaps that we would not like to see. And we do support the state treasurer's recommendation that we take a generic approach. And if we want to expedite the process at the local level, just do it with generic wording that would allow any investment trust pool to move forward. Thank you, sir.
Mr. Miller, let me ask you one question.
Yes, sir.
Is it your assertion that simply naming this fund implies a favoritism of this fund?
We are concerned about that, yes, sir.
Thank you.
Okay.
Mr. Chair,
Delegate Marshall.
question of the witness.
Miller?
Yes, sir, Mr. Marshall. Hanover is allowed to invest in this fund now, yes?
We are allowed, we do not participate in it.
Further question?
Delegate Marshall.
Then what's wrong with allowing these people to also invest in that fund? I mean, the groups that are in Delegate Byron.
The group of 35 that signed on to our petition, we have, I don't want to air dirty laundry, but we have concerns about this fund. And for that reason, we just feel like it should be more generic.
Even,
Delegate Marshall.
even though some of your members do invest into this fund that Delegate Byron has identified in the bill.
And if they're comfortable with it, we do not oppose that. But, okay.
Delegate Farrell.
Mr. Chairman, I'm glad to hear that because I'm glad to hear that because I don't think anybody wants to argue with optionality. And treasurers are elected in most counties, and if the taxpayer doesn't like them invested in the fund, they can vote them out. So I don't know if there's not a way to not address it. I'll probably still support it because I just think optionality is a good thing for treasurers. But is there any way to make it more generic, council? I don't know. I have no idea. So I'm just asking. And if there is, that'd be great.
You're saying the fact that it's permissive is fine, but you're wondering why we need to explicitly name this entity? Is that what your question is?
Yes, essentially, because I don't, Mr. Chairman, from what I'm hearing is now nobody disputes that optionality is a good thing, and nobody's making anybody do anything. And if the treasurer in one county wants to do something, that's great. We do, maybe not funds, but there are so many other instances in the code where we do list one specific thing. I mean,
so is your question of our council whether this
is this the only way to name it?
Could we allow this permission without explicitly naming this entity?
That's what I'm asking.
You're not going to accomplish this. With the purpose of the bill can't be reached without naming. That's the purpose of the bill.
Understood.
he said you can't achieve the purpose of the bill without naming the entity. Delegate Watson.
Thank you, Mr. Chairman. The question is, why do we have the bill if they can do it anyway already? I'm trying to figure this out, and you've lost me on this.
We'll come to that side momentarily. Let me just recognize that we do have the state treasurer with us. Offer her a moment or two, and then we'll turn to the advocates to see if you would be willing, Delegate Watson, to hold that question.
Good morning, Mr. Chairman, members of the committee. My name is Manju Ganariwala. I'm the state treasurer. To just give you 30 seconds of the background, localities can currently participate in the pool without, so this bill is not necessary. They have the option to participate. They just have to get approval from their local governing bodies. This pool was formed by an opinion that was issued by Attorney General Cuccinelli, and in his opinion, he cited that the localities must comply with provisions of the Joint Powers Act, and one of the main provisions requirement in the Joint Powers Act is that a local government must get approval from its local governing body. A local treasurer must get approval from the local governing body to join into any joint pool that is created, not just this pool, but any other joint things that are created in the Joint Powers Act. So our concerns are two. The administration's concerns are two. First, by recognizing and naming a particular investment vehicle, it's just lending your imprimatur. It bears like implicit endorsement of the General Assembly. I know Delegate Byron tried to address that issue by putting enactment clauses in there, but those enactment clauses don't get codified. If you look at the Public Funds Investment Act, it just talks about classes of investment products that you can invest in, whether it's negotiable CDs, commercial paper, asset-backed securities. It doesn't name names of mutual funds. So it doesn't say Vanguard Mutual Fund or Fidelity Mutual Fund you could invest in. So that's our first concern. The second concern is circumventing the requirement that the local governments approve. It's an important checks and balance in the system, and it was the basis on which this pool was formed, and I don't think the General Assembly should weaken that check and balance, especially when it comes to hundreds of millions of dollars of taxpayer money.
So if I could, this bill would not only name them as a possible repository, it would also alleviate the requirement of getting local boards of supervisors, city council approval for that, which is currently required. Is that accurate?
Correct, exactly.
And secondly, are there any other instruments in which to which localities can go for borrowing which require that kind of approval?
I'm not aware of, no. Because this is a instrument formed by local government, that's why it requires that approval. Local treasurers could individually invest in asset-backed securities, but then those other classes of investments have other oversights by SEC, Securities and Exchange Commission, and so does the state LGIP. And I'd also like to respond to a comment that the state treasury would just prefer governments to come to us. That is not the case. Local government investment pool operated by the state treasurer has been in operation for 30+ years. This pool has been in operation for 3 years. We've never said, I think competition is better. Let every local treasurer decide, where they want to invest in based on their needs.
Thank you for being here. Delegate Bloxham, you're next. Delegate Farrell.
Mr. Chair, I think a couple things, because I want to make sure everything's very clear what this fund does and what she was just saying. If treasurer right now wants to go down to Bank of America and Bank of America talks the treasurer into buying in a mutual fund and the fee may be astronomically high, the treasurer does not have to go to the Board of Supervisors to do that. They can with their own money, the treasurer can go to Wachovia, they can go to Vanguard, they can go to some guy who sets up a mutual fund if they want. That is true, right? They can do that without board approval.
One caveat, that mutual fund would have to comply with the Public Funds Investment Act.
Right, and nobody's disputing that.
Right.
So, but he doesn't have to go, he or she does not have to go to the Board of Supervisors to get approval for that, correct?
Right, correct. But because those other publicly offered by companies, public companies, funds offered by public companies are subject to Securities and Exchange Commission oversight and transparency. So somebody could go on Bloomberg and look at, what is the price of that negotiable CD this morning versus.
But Mr. Chair, Delegate Farrell, is this fair to say that this fund really is a fund of funds, is it not? I mean, they may decide, they're pooling their money and they may decide, because they get a lower fee. So what I think really happens is, and I'll let them speak to it, they get their money together because they may get smaller fees from the Bank of America Mutual Fund that is listed with the SEC, that is public domain. I mean, I will ask the other side this, but I doubt this fund hides from anybody what they're invested in.
I'm just saying that naming a fund is not the right thing to do in Public Funds Investment Act. I have no disagreement with the fund existing and localities participating in it.
But Mr. Chair, you were trying to imply that this fund is like a shadow Swiss bank account where money's disappearing and nobody can see it.
No, I did not.
I don't think she was implying that.
But there's plenty of transparency.
I think she was talking about the regulatory oversight on this fund as compared to other trust funds. And I won't put words in her mouth. She's.
That is correct. Exactly.
Mr. Chair.
Delegate Farrell.
But I think, I don't want people to be misled because if you want to worry about the instruments they're investing in, you should just say they should only be able to invest in things registered with the SEC. Because the treasurers can do that now with their own money. All this does is say, instead of Louisa County being able to invest by itself in all these things, it's allowed to pool with Henrico to invest in the exact same things for a lesser amount of money. That's all this does. That's it.
Delegate Marshall.
Mr. Chairman, for the treasurer, so is Delegate Farrell correct that say that the treasurer from Hanover can invest without getting the approval of the Board of Supervisors?
Under this measure?
Yep, no. Right.
Hang on, Delegate Farrell, we've got go through the chair. Delegate Marshall.
Currently, without this law, would any of the treasurers of these objecting groups to Delegate Byron's bill be allowed to go and make the investment without a separate action of their governing body?
I would let the treasurer, local treasurer speak to that.
Mr. Chairman, the way the law is currently written, I have to go to my governing body and ask for permission. In surveying the treasurers around the state, that has not seemed to have been a problem for anyone that I could find. Usually in 30 to 60 days, which is a short period of time in the investment world, a treasurer can get their local governing body to back them on this effort. I would say, when I go to Vanguard or wherever, I'm in control. If I do go to a pooled investment fund, I am giving up some of that control to that larger committee, that larger board, and that's perhaps why this is written the way it currently is, that the governing body should agree that I'm giving up part of my 100% control over Hanover Investments.
Delegate Marshall.
So part of, I'm trying to see in what sense the statement from Delegate Farrell is accurate. I mean, is it partially, does it apply in some cases but not others, or what?
In that this is an investment pool, and it's the only one that I'm aware of other than what the state authorized the state treasurer to run, I think that's why they require currently local government approval.
Delegate Marshall.
He said they didn't have to go get the approval of their governing body. Or at least that's what I understood the gentleman to say.
Perhaps he meant, like, if I went to a specific fund myself, I'm totally the manager or decision maker. Yes, I do not have to.
Okay, so you can do that.
Yes, sir.
Delegate Sullivan.
Thank you, Mr. Chairman. A question for the witness, Mr. Chairman. Sir, you are not here representing the Treasurers Association, are you?
No, sir, I'm not. I am a past president, and I did mention earlier, I am representing 35 treasurers that have concerns about the change. Our association did not even look at this legislation. It came up, I guess, kind of late in the year.
Different question, Mr. Chairman. How many treasurers are there in the company?
There are about
I'm
You're
sorry.
speaking for 35 of them. How many are there total?
There are about 135 elected city and county treasurers, and I am speaking for city and county treasurers.
Thanks.
All right, what I'm gonna do, and I know there may be further questions on this, but we've allowed one side to make their case. We've started with those who have concerns or oppose this measure. There are those who would like to speak in favor of House Bill 2105. So I'm gonna turn to that, and then we'll allow the committee discussion. Yes, sir.
Thank you, Mr. Chairman. My name is Robert Lauterberg. I'm representing Virginia Investment Pool. This is a pool of about 45 political subdivisions. The local governments represented by participants in this pool, they represent about 3 million Virginia residents. The legislation just simply treats VIP like other investment options that a treasurer can choose without adopting an ordinance. This bill was requested by treasurers, some of whom are having difficulty going through this cumbersome joint exercise of powers statute and wanted to be able to select this like they can any other investment. So this simply levels the playing field with things like the state treasurers, LGIP, with money market funds, with mutual funds. It does nothing more than that. It just simply levels the playing field. If I can address some of the concerns that were raised.
That might be helpful.
Yes. VIP is a local government entity that's controlled by the political subdivisions that choose to participate. It was created under the joint exercise of powers. So as a governmental entity, VIP is subject to all the same statutory requirements that a local government has to follow when it makes investments. So you heard about, well, gosh, you know, this pool might be selecting investments that we don't like. No, that's not true. Virginia Investment Pool follows the state code exactly the same as an individual treasurer would do on their own. They can only choose from the investments that are allowed in the state code. Because we're governmental, we're also subject to FOIA, annual audit requirements, procurement rules, and so forth. We've met with the state treasurer who administers the competing investment pool so we could explain to her how Virginia Investment Pool is organized. She continues to confuse a governmental trust like VIP with a private investment fund. The constitutional issue that she's talking about applies to private corporations and not to a governmental trust like VIP. This bill simply makes it easier for local governments to participate in VIP if they choose to do so, and any locality or any treasurer that chooses not to participate in VIP is not impacted by this bill in any way. So we hope that we can count on your support.
Dr. Keem, I think, has you have a question for this. Barbara?
Yeah. Thank you, Mr. Chair. Does mic work now?
I'm not hearing, other than, I'm hearing you audibly, but I don't hear.
My mic is still broken.
Microphone.
Mr. Chair, I wanted to just, I'm sorry I walked in a little late because I was downstairs in education. I did see that there's a substitute that post-dates the subcommittee meeting.
It's been adopted.
Yeah, and I just wanted to point out that I think the substitute addresses some of the concerns I had during the subcommittee, which is the reason why I voted no, but I wanted to just make sure that that substitute came after the subcommittee meeting.
The question is, did the substitute come after the subcommittee report?
This is the subcommittee. This is the subcommittee substitute.
I'm told that this is the one that was adopted in subcommittee.
Well, Mr. Chair, the reason I ask is the top of the date stamp has January 27th at 1:55 p.m., which is after the date of the substitute. So I just want, the subcommittee rather. So I just want to make sure that this, because I see on lines,
I'm told that that's when it was printed.
Okay. But lines 17 through 22 does seem to address some of the concerns I had earlier. So I just wonder if this is the version that we are dealing with now.
It is.
Okay. Thank you, Mr. Chair.
All right, anything new that you have to?
I'd like to address two additional points that have been raised previously.
Very briefly.
Thank you, sir. David Ogburn from Capital Results, representing BMO Vaco Finance. I want to very quickly address 2 points that were raised earlier. There was discussion about checks and balances in the Joint Exercise of Powers Act. Simply stated, the Joint Exercise of Powers Act simply allows localities to do things jointly they could already do on their own individually. There were no special checks or balances added to the creation of the Virginia Investment Pool when it was formed under the Act. It seems that it's certainly within the purview of the General Assembly to make a policy decision that after 47 localities have gone through the Joint Exercise of Powers Act to participate in it, additional localities can safely choose to participate without going through this cumbersome process. In terms of checks and balances, the Constitution of Virginia already permits any necessary checks and balances. While treasurers are constitutional officers, their duties are subject to the charters of the localities which they serve. That's Article 7, Section 4 of the Constitution. So if any locality believes their treasurer should or should not have additional powers, they have a constitutional way to go through and take care of that today. The checks and balances don't apply to any of the other investment choices that are available to local governments. I would argue they're simply no longer necessary. The second point I'm making, it's even briefer, Mr. Chairman. We've heard a lot of discussion about the Virginia Investment Pool being the only investment choice named in the code. Indeed, the state treasurer's own local government investment pool is a creature of the code and specifically named Title 2.2, Chapter 46. That's all I have, Mr. Chairman. Thank you.
Delegate Hugo.
Mr. Chairman.
Yes, sir.
With that presentation, I think we have the bill, we've already adopted the amendment, the nature substitute. And with that, Mr. Chairman, with those fine explanations, I would move that the House Bill 2105 be reported as amended.
Motion to report House Bill 2105, the amendment in nature of substitute. Further discussion on the motion? None members will indicate their vote on the electronic voting board. The clerk will close the roll. House Bill 2105, amendment in the nature of substitute, reports on a vote of 16 to 1. That finish your substitute report? All right, Chairman. We have one more measure, and that is House Bill 1814. And that is my own bill. Delegate Klein, would you take my chair for a moment? Sure. As the description has it, this is simply an extension of the current tax credit for worker retraining and telework expenses. And it would move the date forward to January 1st, 2022, since that date comes. But the bill does.
All right. Any questions for the patron? I have a motion.
Move to record.
Is there a substitute?
There is a substitute.
Why don't you go ahead and state that? There is a substitute, Mr. Chairman, and the staff can give a brief indication of why there is a substitute.
Mr. Chairman, this would be a substitute to just recognize for the worker retraining credit that the certification of eligible programs is currently being administered by the Virginia Economic Development Partnership Authority, whereas this section of the code currently states that it's being administered by the Department of Small Business and Supplier Diversity. Mr. Chairman, it recognizes that currently what that department does is forwards the applications to VEDP. So this would just eliminate that extra step.
All right. Move to substitute. All right, there's a motion second to adopt substitute. All in favor say aye. Aye. Opposed? All right, substitute's adopted. Discussion on the bill. Is there a motion?
Move to report.
Motion second to recommend reporting the substitute. All in favor say aye. Aye. Oh, I'm sorry. No. Members will record their votes.
That's right, we have it.
Yes.
Dr. Klein. And let me note this, while this concludes our business for today, there are, I believe it's 5 measures before Delegate Hugo's subcommittee, which will meet at the customary time on Wednesday. That being the case, there will be some measures, several that we've deferred from this committee today. So, in addition to anything that emerges from subcommittee 2. So we will meet as a full committee following the meeting of subcommittee 2 on Wednesday. There's nothing else to come before the committee. We are adjourned.